September was a terrible month for the stock market where the S&P 500 and Nasdaq were both down over 5% and the Dow Jones was down about 4%. Even though the stock market performed terribly during this month, this is actually a pretty good thing for investors if you look at it through a certain perspective. This is a great time to buy discounted stocks. What's up, everyone? My name is Jack Murphy, and in this video I'm giving you 5 stocks that I am going to be buying before the end of 2024 and maybe even a little after 2024 depending on their valuations. These are stocks that are discounted and I think are going to do well long term, so now is a good time to start buying them, in my opinion. Before I start, I want to quickly mention I am not a financial advisor or professional. These are just my opinions, but with that said, let's get right into the first one, which is Pepsi. Pepsi is a global food and beverage company that has a lot of popular brands such as Pepsi, Lay's, Gatorade, Quaker Oats, whatever. They have so many different brands that they own, and I'm sure you've heard of Pepsi, and I'm sure you've had some of their products before, especially if you live in America, but pretty much everywhere in the world too. So Pepsi has a pretty good handle on the food and beverage market. I actually do own some Pepsi in my portfolio, and I'm down about 5% on it, a little over 5%, which is not bad. But if you look at the last month, Pepsi has had about a negative 10% performance, and year to date they're also pretty much the same at about a negative 10.82% return. And if you look at Pepsi's 52-week low, they're only about $5 away from that 52-week low. So, in my opinion, that is a sign I like to see when I'm trying to buy some stocks. Let's go and look at their dividend stats now. They currently have a 3.2% dividend yield and a 65% payout ratio. That payout ratio is a little bit high, but I'm not worried because Pepsi has a great track record of paying their dividends, where they have over 50 years of consistent dividend growth. They also have about a 6.87% 5-year dividend growth rate, which is also not bad. Pepsi is a dividend king, so I'm not really worried about them cutting their dividends anytime soon. This company is going to be doing business for as long as I could be alive for, so I'm not worried about them going bankrupt or anything. The next stock I am buying up before 2024 is Texas Roadhouse. Now, Texas Roadhouse is a family restaurant that specializes in their steaks. If you live in America, I'm sure you've heard of Texas Roadhouse. If you look at Texas Roadhouse on Seeking Alpha, in the last month they are down over 9%, but year to date only down about 1%. I believe this is a good company long term, and they are about $2 away from their 52-week low, so to me that is a good time to accumulate. I have to give credit to Financial Education, his YouTube channel, and one of his recent videos in the past 2 weeks kind of brought Texas Roadhouse to my attention, and it made me realize it is a very good stock. If you look at Texas Roadhouse's balance sheet on Seeking Alpha, you can see they have about $107 million in cash and cash equivalents, but they have $2.5 billion in total assets, which I think is a very high number, especially considering they have no long-term debt. In terms of thinking 10, 20, 30 years out for a company, having no long-term debt is huge. Texas Roadhouse has about $1.4 billion in total liabilities, meaning their stockholder equity is over $1 billion, which is good to see. As far as balance sheets go, I don't see a lot of better ones than this, so that definitely makes me feel confident in the company's long term. Let's also look at their dividend stats because that is also an important metric when I'm considering to buy a stock. As you can see, Texas Roadhouse has about a 2.4% yield and a payout ratio of 46%, which is below 50, which I like to see. The 5-year growth rate is 17%, so that is definitely very nice to see, but their dividend growth history is 0 years, which is concerning. But if you look at their dividend history, they cut dividends during COVID, which I think is fair because a restaurant business during COVID wasn't exactly making a lot of money. This is before delivery apps like Grubhub and Uber kind of became popular. So now that the takeout method for restaurants is doing a lot well, I don't see something like this happening again. So besides that dividend cut, they have good dividend history, as you can see. So I'm confident they will be able to keep paying out their dividends, and I don't feel too concerned with a dividend cut in the future, but it is a possibility. The third stock I want to buy before the end of 2023 is Disney. Disney is an entertainment conglomerate that is known for their movies and theme parks. I'm pretty sure you know what Disney is. They have some of the most valuable IPs in the world. They are probably the biggest name in the entertainment industry, but if you've been paying attention to their movies in the last couple of years, there has been a quality drop a lot of people have noticed, and that is affecting the company. If we go to Seeking Alpha, in the last month, Disney actually did perform in the positive, but if we look year to date, they are down a little over 5%, and if we look back 5 years, they're down over 25%. Now, the reason I'm buying Disney is different than the other companies. I'm not buying off of any kind of numbers or balance sheets or anything like that. I kind of just have a good feeling about the company. Disney has been the biggest name in the entertainment industry, I would say, for the last century. And just because they've had a bad couple of years doesn't mean they can't turn it around. Disney has some very big franchises like Star Wars and Marvel, and recently they haven't been doing well, but it's been a couple years. They've had a ton of feedback from their fans, and Disney is not a stupid company. They have been very successful for a very long time, and I believe over the next 5 to 10 years they're going to start producing good content again. They also got Disney Plus, which once they start making better content will do really well. So overall, I just feel like in the next 5-10 years, Disney is going to look a lot better and people are going to start buying Disney stock again. If you were going to comment your opinion about any stocks, I would definitely want to hear about Disney, because this is probably going to be the most controversial pick, because this one is more of just an opinion based on why I'm buying it and less numbers based. Definitely let me know what you guys think about this pick in the comments, because I actually do want to hear what you guys have to say about that. Also, Disney's got no dividends, so let's move on to the next stock, and that will be Realty Income. Realty Income is a popular real estate REIT in the United States. They focus on owning commercial real estate and commercial properties, and they make money renting and leasing these properties, usually for long-term agreements, and they are known for being the monthly dividend stock. They are very famous for their monthly dividend payments, where they've been doing that for a very long time, but I'll talk about that more later. Realty Income has had a pretty bad month where they are down over 9%, and year to date they're down about 20%. They are currently about $2 away from their 52-week low at about $48, and I have to say, I was excited to buy Realty Income at $60, so being able to buy it at $50 is a great deal to me. I'm down about 17% on my current shares of Realty Income, so this is a great opportunity for me to lower my average buy-in price. Long term, Realty Income has been able to steadily increase their stock's price, but like I said before, they are mostly known for their dividend stats, so let's get into that. As you can see, they have over a 6% dividend yield, which is also due to the fact that their price has gone down a lot in the last month and year, but 6% is still a very nice dividend yield. And if you look at their payout ratio, it's about 75%, which does seem high, but most real estate REITs have very high payout ratios, so this is actually a good payout ratio in my opinion. They only got about a 3.7% 5-year growth rate, but considering they already have a high dividend yield, I'm not too upset with that. Their most impressive stat in my opinion is their 25 years of dividend growth, where they've been able to increase that monthly dividend payments for 25 consecutive years, and they've been paying dividends for even longer. So in my opinion, it is a great time to pick up some of that Realty Income stock. And last but not least, we have Target. Target is a popular retail store in America. If you live in America, you've definitely heard of Target and probably have been in a Target, but they're basically just a big chain of general stores that sells like clothes, groceries, home goods. They're basically a nicer version of Walmart, very well established in America, and I believe they're just going to do well long term. Target is a stock that I do have in my portfolio already, and I'm down about 23% on my shares, but like I said, this is a good buying opportunity. If we go to Seeking Alpha, in the last month, Target is down about 9%, and year to date they're down about 26%, and they're about $9-10 away from that 52-week low, so I think it is also a good time to start picking up some Target. Like I said, Target is a well-established company, and their stores are everywhere in America. I'm definitely confident in them having business long term, but I want to go over to their dividend stats, which are very impressive. First off, they have about a 4% yield, which is pretty good in my opinion, especially for a company like Target. Their payout ratio is almost 60%, but I don't really have a problem with that. Their 5-year growth rate is over 11%, which is very nice to see. But the absolute best part about Target's dividend stats, in my opinion, is their 54 years of dividend growth. They are crushing it with that dividend growth. Not a lot of companies can say they are a dividend king, but Target can. So even though that isn't a guarantee, being a dividend king makes it very unlikely they are going to be cutting their dividends anytime soon, which is a great indicator for me when I'm buying a stock. Alright, so let's recap. Pepsi, Texas Roadhouse, Disney, Realty Income, and Target are all stocks I'm trying to buy before the end of 2023 and also in the beginning of 2024, and maybe even longer depending on the values of the company. I currently have Pepsi, Realty Income, and Target, and Disney and Texas Roadhouse are new positions for me. In my opinion, these are all solid companies that are just down right now because the market is down, and they're at good values to buy for long term and have solid dividend stats for long term, which is something I really like when I invest in stocks. I'm a dividend guy. But there's also Disney, which doesn't have dividends, but in my opinion, they're just too big of a company to not turn themselves around. Maybe the last 5 to 10 years were bad, but they're going to turn it around in the next decade at least, and probably rise to the top of the entertainment industry again. Better movies, maybe better theme parks, and maybe they'll start getting into the video game area, VR area, who knows. There's a lot of opportunities for Disney to grow, in my opinion. I'd definitely love to hear your thoughts on these stocks that I've talked about today. I also want to hear if there are any stocks that I didn't mention that you are buying right now during this dip in the market. I always love to hear what the community is investing in, so I'll definitely read every single comment. But that is all for this video. Here's some other videos on my channel you could definitely check out. But besides that, that is everything for this video. Thank you guys for watching. Peace.